It's March 31st, 2023, and I had a great presentation today with my team and one of our preferred lenders in California, Melissa Turner, and we learned a little bit more about the CalHFA program called Dream for All Loan. It's a shared appreciation program that the state of California is now offering to first-time home buyers, and it's mind-blowing because it's going to allow a lot of our clients to be able to afford homes in today's market and be able to lower their payments with these specific terms and underwriting conditions. So I wanted to share them with you today because if you're a buyer that's thinking about purchasing a home for the first time in California, this incentive is something that you don't want to miss, and I do not believe it'll last long. There is a limited amount of funds that the state will be allocating for this, and I want everyone to know how to take advantage of it. So I'm going to share my screen and I'm going to walk through it with you. And if you have any questions, you can message us here, DM us here, or you can email them to us at info@nmcrealty.com. But we will also have my direct contact information at the end of this video. So feel free to ask away. I'll pull in our lending partners to answer any questions. And remember, this is a program that's specific to first-time home buyers in the state of California. So I'm going to share a little bit about the CalHFA Dream for All Shared Appreciation Program now. So home equity is proven to be the strongest ways for families to build and pass on generational wealth. And the CalHFA homeownership wants homeownership for all Californians. The Dream for All Shared Appreciation Loan provides buyers with up to 20% of the purchase price to be used for down payment and closing costs. That is huge. They have never done anything like this before. So your borrower requirements is to be a first-time home borrower. That means you have not had ownership interest in any principal residence or resided in a home owned by your spouse in the past 3 years. So your past 3 tax filings, you have not had ownership in a home. Now, this does not apply if you have investment properties. We can delve a little bit farther into that. Just contact us at info@NMC Realty and we'll put you in touch with some of our preferred lenders to answer those questions. Because if you do have ownership interest in investment property and you've not lived in it, then you may still qualify. You must be a citizen of the United States or a qualified alien. You must take 2 homebuyer education courses. Typically, they only ask for 1, but 2 is not a problem with what they're offering. I don't presume for anyone. And the property must be owner occupied. So you must occupy it as your primary residence within the first 60 days. If a seller is selling and they're not ready to get out and you have to give them a rent back or anything, just remember that it cannot be more than 60 days after you close escrow on your new home. No co-borrowers that are not occupants are allowed, and no co-signers are allowed that are not going to be occupant. Keep those requirements clear just so you understand what you need to do to qualify. Your underwriting requirements. This is a scenario that you can do with a 20% shared appreciation loan. So if your original sales price was $500,000, 20% of your sales price is going to be $100,000. So that's where this program is going to come in with the shared appreciation loan. You'll be able to borrow up to $100,000 towards your purchase. At the time of your sale, your new value will be $700,000 because your appreciation rate in California. So you've appreciated $200,000. 20% of the appreciation, which is $40,000, will need to be paid back to CalHFA for this loan. So you'll have your $100,000 from the original loan amount that they gave you for the Share Dream for All program, and then your $40,000 of appreciation, which you will owe back to the program. The very, very simple numbers here. Again, I would love for you to speak with a mortgage professional to help explain this more. What I wanted to jump to is your underwriting requirements. So your combined loan to value must be between 70% and 105%, meaning if CalHFA gives you 20% down and you want to add an additional 10% to offset your closing costs if they're in addition to that, your loan to value cannot exceed 70%. So 70% loan and 20% of the value of what your down payment is going to be combined with this program. Your maximum income for Orange County is $215,000 for San Diego County, and it's about $180,000 for LA County. Minimum FICO requirements are $680,000, and you can have up to a 50% on your debt to income ratio with a 700 FICO score and up to 45% debt to income ratio with your 680 FICO score. Typically with programs like this, we see debt to income ratios around 43%. So again, they're being very generous with this and you have to take advantage of it. It's eligible on single family homes, condos, and manufactured home. a lot of options there for you, whereas a lot of other loan programs like this do limit manufactured homes or single family homes. Here's a little chart to talk about the limits within the different counties. Like I said, San Diego is 211,000. Orange County is 235,000 would be your limit for the income limit. You do have a max income amount that you will need to stay within to be able to qualify, but those are pretty good income limit amounts for first-time home buyers. Definitely reach out and we'll tell you a little bit more about that. Your total cost analysis on a purchase, we did a couple examples with our lender for you, and the total cost example on an $835,000 loan, which is right around the median home price, probably a little bit below right now. So for a conventional 30-year fixed loan at $835,000, your loan amount would be $793. Your interest rate would be about 6.9 today. Your APR would be about 7.3, and on 30 years, your payment would be $6,875,000 a month. Your cash to close would be $56,000. Now let's compare that conventional loan with 5% down to this CalHFA Dream for All shared appreciation loan. At $835,000 purchase price, your loan amount would be $668,000. So you're already over $100,000 less than what your loan amount is, which is of course what? Going to bring down your monthly payment. Your interest rate is going to be lower at 6.3. Your APR is going to be lower at 6.6, and your payment's going to be significantly lower at $5,632. And your cash to close is going to be about half. It's going to be about $28,000. This is phenomenal savings. If you qualify for this program and you're able to take advantage of these incentives, this alone, saving you almost $1,200 a month or over $1,200 a month, is going to help your affordability in getting into a home. And I suggest everybody take advantage of this. These are just some minor examples. We can do a cost analysis on any other purchase price for you. And remember, that also means that if you're aiming to purchase a home that was $600,000 on a 30-year conventional loan, your affordability is going to be greater, which means you could probably bump it up to about a $700,000 purchase price and probably even save money on your monthly payment. So it's going to open up more inventory for you, because we are still struggling with our inventory levels, meaning we have more buyers than we have sellers, and that's not fun. But with this program, it's going to open up your affordability to be at a higher purchase price and giving you more options for housing. So all incentives that I, again, am telling all of our buyers to take advantage of. So act fast. We don't know how long it's going to last or how many funds they have allocated or what is still remaining. It just got released this Monday, and it's only March 31st right now. We are advising all buyers to contact us so we can get you in touch with our team of mortgage professionals that we've worked with for over a decade to help answer more questions for you and help you get qualified. So my team at NMC Realty Group can help you find a home. Contact us here, subscribe to our channel, like all of our social channels on Instagram, Facebook, LinkedIn, Twitter, and we are going to be providing you up-to-date information about this CalHFA Dream for All loan for days and weeks to come. We look forward to hearing from you, and thank you so much for tuning in. Have a great